Good afternoon. You're watching the market closing show on the Business Today show. As far as the closing action is concerned, let's take a look at what's hot in the corporate and the financial world. Massive drop in stock prices of Reliance Industries wipes out 1 lakh crore rupees of investors' wealth in a single trading session. The index heavyweight also drags down both Nifty and Sensex. Investors sell the shares even after the company is denied its refineries and receiving fresh Russian crude oil. Brokerage CLSA has dropped Reliance Industries from its 2026 top picks, favoring D-Mart and Zomato. Following Reliance Industries' sharp slide, markets also slip as investors weigh US tariff risks and Venezuela tensions amid the ongoing Q3 earnings updates. Sensex now falls 400 points, near 85,000. The Nifty drops about 80-odd points, now trades below 26,200, with oil and gas and HDFC Bank under pressure, while PSU banks and pharma stay selective buy. Tata Group stocks under pressure as trend shares slide up to 8% after its Q3 business update showed 17% revenue growth but slower momentum. Tata Motors passenger vehicles also slips 2% as JLR Q3 volumes declined sharply, while TCS balances out, rising 1%. Tata December auto sales show mixed trends. Overall retail grows by about year on year but slips month on month. The two-wheelers dip, but commercial vehicles gain in trade. We've also seen passenger vehicles rise. Dealer sentiments remain positive heading into 2026. NVIDIA steals the spotlight as CES 2026, the most powerful tech event in the world, as CEO Jensen Huang also unveils the powerful new Rubin AI chip to meet soaring computing demands. The tech show also sees a push towards robots and auto taxis, while Intel and AMD step up the chip race. Straight away, looking at how the markets are trading at this point in time, you do see the Nifty trading at 26,179 at this point in time. But there's breaking news coming up on your screens, viewers. This is as far as the steel companies are concerned. Indian steel companies are found guilty. The steel majors have breached the antitrust law. The CCI probe into Tata Steel, JSW Steel, SAIL, that's the Steel Authority of India, companies have colluded in setting steel prices. Also, hefty fines are likely on these companies, as per top officials who have told Business Today television as well. So that's breaking news really coming in on your screens, viewers, with respect to the steel companies. Metal stocks are also now seeing some pressure from the morning trade. You do see the index still trading about 0.2% higher. Remember, all up till January, we had been looking at how the metal prices and the metal stocks had been pulling up the markets higher. But this is fresh news and this is disturbing when it comes to some of the top steel companies in India. Let's also welcome our guest. Neeraj Diwan is now joining in on the program to give us his understanding of what's really happening on the Indian steel space. Indian steel companies are found guilty. We are hearing, Neeraj, this is as far as the steel majors are concerned, as they seem to have breached the antitrust law. This is with regards to the CCI probe into Tata Steel, JSW Steel, Steel Authority of India. And, this has been an ongoing case since 2021. What has been found out as per CCI probe is that the companies have colluded in setting the steel prices, and there is some kind of an anticipation there could be some hefty fine, which is likely on these top companies as well. How are you looking at the impact on the steel companies?
Yeah, good afternoon. Yeah, definitely there'll be a short-term negative impact on the companies because, if this kind of order has come, this kind of outcome has come, which is not really good. And, maybe the one thing will be good that, for future for the consumers of steel, whether it's the real estate sector or the construction infrastructure sector, it'd be good for them, at least now and future. These sort of measures will not be taken and they will not be, sort of, deciding the price, colluding in deciding the price. So it'll be good for the consumer. The short-term negative impact will be there. But then, steel is a global commodity. So, in the medium term, again, the prices will be impacted by what happened globally, what happened in China, what happened in US. So then again, it will be back to the macros. But in the short term, definitely this is a negative.
Okay. I also wanted to ask you, Neeraj, when it comes to the metal companies, they had been soaring up until now. In the last couple of months, there's been a lot of attention that's drawn down there of investors, especially with the surge in a lot of metal prices that we've been seeing. It started off with the precious metals, went on to copper, now even aluminium. And we have been seeing all of these stocks really rallying in trade. What should investors now do, those who have become heavy on aluminium, zinc, copper kind of stocks in their portfolios now?
See, as far as copper is concerned, specifically, or even silver, I think the kind of demand which is there globally, demand is much more than the supply right now. And there's huge supply which is coming for silver. Copper prices are going up because of the tariff measures in US and because of the supply constraint also. So I think those prices will remain stable and I think they can even inch up further. So if one is invested into silver or some you know stocks related to silver or copper, I think one should stay invested for now. Though you should not jump in now and start investing at such high prices. But for someone who's already holding, I'll still recommend them to hold. And in case there is a correction in any of the stocks based on correction in silver or copper in the short term, then that can be an opportunity to enter. But at these prices, after the stocks already run up, I think it is better to stay invested and not enter at these prices. As far as aluminum is concerned, I'm not so positive on aluminum because aluminum supply is still not that limited. Aluminum supply is still aluminum supply is still not that limited as far as silver or copper is concerned. So aluminum may be the stocks may have run ahead of what the market demand supply scenario is. So there one can be a little cautious in these prices.
Absolutely. Let's also briefly discuss Reliance Industries now, Neeraj. This is when the stock has actually fallen sharply in trade today, is among the top losers on the Nifty as well. This is despite the company now rejecting a recent report that claimed 3 vessels carrying Russian crude oil were headed to its Jamnagar refinery. Reliance Industries has clarified that it has not received any such cargoes in the recent weeks and does not expect Russian crude deliveries in January as well. In fact, adding to the pressure, we've seen CLSA has now removed Reliance Industries from its India portfolio, citing underperformance in 2025. And to understand this development better, let me first go across to my colleague Aishwarya Patil, who's joining in to share with us what really has happened there. Aishwarya, walk us through the controversy that's surrounding the Reliance Industries report.
Well, you're right. It's the top loser on the Nifty 50 today, down about 4.5% as of now. As you rightly mentioned, Reliance Industry this morning did put out a statement saying that this report is blatantly untrue, and they've said that the details are incorrect as far as Russian crude reaching their Jamnagar refinery. 3 vessels, as the report suggested, would be reaching their Jamnagar refinery. What they've categorically said is that this is untrue, of course, and even in January, through January, they're not expecting any Russian crude coming through. This is extremely important considering the fact that geopolitical turmoil is now in the storm as far as crude oil is concerned, supply chain is concerned, price volatility, all of that, with Donald Trump threatening countries that are importing Russian crude. So Reliance Industries, of course, that clarification on a geopolitical level and on a national level is also important. Reliance Industries did give out that clarification this morning, stating that no such vessels are expected.
Okay. Also wanted to ask you, Aishwarya, with the stock now down by 4.5%, how the brokerage houses are reacting, especially CLS's portfolio exit. What are the details there?
Well, as far as CLSE's report is concerned, what goes out is, of course, Reliance Industries and Nestle. What they bring back to their pack and their exposure, they're saying is that 2 other consumption names, which is one is DMart and another one that they will be focusing on increasing their exposure. Essentially, what they're saying is geopolitically, the markets have been down, a lot of turbulence and volatility, but India
Yeah,
could be a safe haven, a safe net in 2026 as compared to other markets in the world, even though the growth
sure.
might be slow in 2026. So that's
Right,
what
Aishwarya.
that's what
Thanks a lot
CLSA is
for
saying.
sharing all those details. Neeraj, let me come to you. Reliance Industries, how do you see this dip? Is it just a knee-jerk there? Would you be tempted to buy this dip into Reliance Industries? CLSA on the one hand is talking about the underperformance in 2025 of Reliance Industries. They have pulled out from Reliance Industries when it comes to their India portfolio. In fact, 2026 was already being seen as a year when Reliance Industries could have a lot of opportunities by way of launching the Jio IPO. But seems like at this point in time, the confidence is still not there. How are you looking at the largest listed stock market stock, Rhea?
According to my understanding, today's reaction is just a knee-jerk reaction. I think fundamentally nothing has changed for Reliance in the last couple of days. So I feel that this should be an opportunity. Like you rightly mentioned, there is a possibility of geo listing this year. Plus, there is the retail segment, which has been doing well for Reliance for the last 2, 3 quarters. And with the recent GST cuts, some demand pickup has been seen there. So that should continue doing well. So I feel that, and plus, there, investment in hydrogen and green energy is also, going to get results in the next couple of years. So I will feel that this is an opportunity. So one, we should be accumulating only Reliance if one is a medium to long term investor.
Right. We'll also focus a bit on the IPO space as well, viewers, because that's another, space that a lot of investors keep an attention to. We have Coal India's arm, Bharat Coking Coal, which is all set for its IPO debut on D Street this week, opening on January 9. And this will also be the first IPO of 2026. The price band is just 21 rupees to 23 rupees per share for a 1,071 crore rupees issue. And my colleague Asta Chopra spoke to the management of BCCL on the IPO proceeds, the growth plans and outlook. Let's listen into what she had to say.
How the proceeds will work and what is the main objective of the IPO? How should the investors think like that?
Actually, the BCCL is a 50-year-old company, and it's already a board is there to bring more corporate governance transparency. The objective is to list this company in the stock exchange. The proceeds will be utilized for the diversification program of the Coal India Limited.
Okay, so sir, can you explain us more like what percentage will go into the capex or maybe the debt reduction, or how it will go across the sectors?
Actually, there are the two things, madam.
Okay.
BCCL projected profits are more than 2,000 crore rupees every year, and their capex requirement is around 1,000 crore rupees per year for the next 5 years. So after capex, they will have a 2,000 crore rupees profit plus 400 depreciation, sufficient money to serve the dividend also to the shareholder. So the company does not require anything from the holding company for the capex purpose. This entire proceeds of the will go to the Coal India diversification program.
Okay. So, CMD sir, coming to you, what will be the growth strategies of this company? First of all, it's a major sector and one of the booming growth sector for India as well. So, what are the growth strategy company going forward?
First of all, you have to know what is BCCL, Bharat Coking Coal Limited. We are the prime main producer of the coking coal. We are producing 58.5% coking coal of the total India coal production. And presently we are, last year we have done 40.5 million ton of coal, and gradually year to year up to 29-30 our production growth will be up to the 54 million ton. And another factor is our washery. Presently we are having washery, 5 washery, 13.65 million ton capacity, and up to 29-30 it will just double, around 27 to 28 million ton. And you know the value and importance of the washery. After washing of the coking coal, it goes to steel, and it is raw material for the steel. In that way, our coal production will be also in a improving order, and washery also.
All right, Neeraj, what do you think of Coal India subsidiary getting, the eyeballs there of investors there this week with an IPO? Of course, this is an offer for sale completely, so it's not the company that's earning the money, it's the Coal India, which will be divesting about a 10% stake there. How are you looking at this opportunity for investors who have for many years held that Coal India should be a part of the portfolio for long term because it's a big dividend play out there? Of course, it's the largest, having almost a monopoly there when it comes to coal producing and mining and all of those things. How would you look at a subsidiary of Coal India now bringing up an opportunity for investors?
I think it's a decent issue. They priced it also well. It's not so
Yeah.
expensive, even on valuation. So for an investor, if you get some allotment, it should not be a bad investment to keep for medium to long term. Like they also in coking coke, they are a major player. Plus, it's a government company, so the dividend policy that is there for Coal India, should also continue for the subsidiary. So I feel that for investor, it's a decent opportunity.
Okay. And from the IPO space in 2026, do you believe there will be a lot of opportunity for investors? Are you also looking at telling your clients what to watch out for, what to keep some money away for as well? There'll be a lot of startup names yet again making their debut on the D Street as far as 2026 is concerned. How are you advising clients there?
So basically, we have been avoiding IPOs for the last couple of quarters
Okay.
now, because they've been coming very expensive at very high valuations. And if there's a good IPO, then you don't get allotment. The money just comes back. So I feel that secondary market, which is a broader market in the last 1 year, 1.5 years, has not done that well. So their
Yeah.
stocks have some mid caps, small caps have fallen by 30, 40, 50%. So there may be better opportunity there. You have a track record, the profitability, the past track record of the stocks. I think it'd be better to invest the money there than waiting
Sure.
for the IPOs, which are anyways coming very expensive now.
Okay, let's shift focus to the auto space next. Viewers, the auto retail sales are showing a mixed trend in December with a sharp month-on-month slowdown post the festive season that we have seen, even as the year-on-year growth remains quite healthy. This is as per the FADA report that we have got, which has released the December numbers now, and my colleague Chetan Bhutani is also joining in with all those details there. Well, Chetan, we were hoping that the GST rationalization and the good news as far as the auto companies are concerned in terms of the numbers and the sales are concerned might just continue even in the last month. What really happened there?
Well, Sakshi, I was speaking to R. Velu Swamy, the president of Mahindra Automobile Business. He, in fact, told me that it's a normal phenomenon because December is a month which is full of festivities,
Yeah.
especially when we saw that, the September month had the GST rate reduction. Naturally, the consequences were that December saw huge sales because ultimately the vehicles were getting delivered by that time. So as per, sales, as per the FADA data, the growth actually picked up in the September to December after GST improved affordability. We saw cars at a massive growth of about 9.7%, two-wheelers at 7%, CVs at 6%, tractors at 11%. So clearly, that means rural activity has picked up. GST impact has been followed up. The rural demand is actually leading with 12% versus urban demand of 8%, which is a very good trend.
Okay.
EVs and CNG trend is also picking up the trend as well. In December, we saw about 20 odd lakh cars being sold, with a car growth of in December only at 26 odd percent, and CVs at 24%. Inventory, of course, was down because there was a huge demand pent up, and FADA, the dealers have also in fact pointed out, Sakshi, that the supply chain constraints and lending issues might create some issues. But yes, major automobile companies are hoping that the December party to continue till about the March, which ends, of course, the financial year.
Okay, hoping for even better January to March space as well as far as the auto sales are concerned. Neeraj, coming to you, how are you looking at the auto space? Remember, January is also the month when some of the companies have resorted to their annual price hikes as well. So far, they were joyous on account of the GST rationalization, which started September end, and up until December, we've seen that number flow in strong in some of the segments that Chetan also highlighted. How are you looking at the auto space and the opportunities for investors?
I feel that still, the momentum should continue. As after the GST cut, we saw good momentum. We saw decent momentum even in commercial vehicle space. So I think that commercial vehicle space momentum should continue because second half of the year is very strong for capital goods and related companies. And even in the four-wheeler space, I see the momentum continuing. The likes of Maruti, Mahindra has a new launch also, and they have been able to deliver it in the last so many quarters now. So I feel the momentum will continue in this last quarter also.
Okay. In fact, we've also seen some more action as far as the auto space is concerned. Mahindra has now unveiled the all-new XUV 7XO, the successor to the XUV 700, with updating styling, advanced cabin tech, and enhanced safety features as well. The new vehicle is now priced in the range of 13.6 lakh rupees to all the way up to 24.9 lakh rupees. It will now be competing with the Creta on the price front, along with the MG Hector, Hyundai Alcazar, as well as many others as well. Let's listen into what Chetan Bhutani had to really look at the first stance of the 7XO from Mahindra & Mahindra and finding out what are the latest features there. Let's go across to Chetan again.
Well, the XUV 7XO is finally here into the Indian markets, launched at a very competitive pricing of 13.66 lakhs for a petrol manual and 14.96 lakh for a diesel manual. However, the car has been taken from various pre-looks of its predecessor, the XUV 700 in particular, especially the C-shaped headlamps out here has been very highly taken from the predecessor. Again, from here as well, the grille of course goes with the XUV 9E and the XUV 9S. Similarly, the grille below and the bumpers have been but what really stands out in this vehicle is of course the stance it's standing at. The XUV 700 was a little more on a linear side of aggressive stance. However, this I feel is on a more aggressive stand and gives you a more commanding position. But the good part about it would be the interiors. Let me tell you how. The styling elements from the latest born EVs have been adopted. You get a nice good detailing of about the connected coast to coast screens you get, and mind you, this is from all the features, from all the base variants as well till the top variant. Every car gets this particular screen right there. Nice touch buttons out there, nice beige and dual tone colors given out there. No use of cheap plastics gone. Very good move by Mahindra. However, again, we have this touch buttons out here. No, not much use of physical buttons. That of course we'll come down to later. You have this nice glass holding, and you have this nice storage space area that you can use. Now coming to the boot, I just folded the seats. I can pull it back if you want. There you go. That you can show inside, Abhishek, of what really the car looks in the cabin. So yeah, a panoramic sunroof, a manual tailgate, no connected DRLs for the rear lamps is of course one of the key flaws that the car should have. I would have been much happier if you could have got a connected tail lamp. But yes, 16 speaker Dolby Atmos, probably the first in the segment. And this car is going to of course compete with the MG Hector, the Hyundai Alcazar and various cars. But now this car is also going to compete with the Hyundai Creta, because it starts at 13.66 lakhs, definitely crossing paths with the Creta.
All right, Neeraj, what do you make of M&M's XUV 7XO? Are you also excited about this one? Have you been looking at that? And what kind of opportunities do you think M&M as a stock would present? Because it's now stepping on the gas when it comes to newer models, refreshed facelifts that we are seeing, and of course on the EV space as well.
We've seen lately whatever models M&M has come out with or whatever new launches, they've been very successful and the cars have been sold out very fast. The bookings have been very strong. So I feel that similar response should come for this also. I think let's look at the numbers, let the numbers come to get a fairer view of what is the response to this car. But looking at the price point and the kind of features and luxury they are providing in this price point, I think it should be very aggressive and the numbers can be very, very interesting to watch.
Absolutely. So that's the space to truly watch out for. The auto space definitely is going to be in the thick of action. Neeraj, anything else that comes to your mind in the run-up to the budget? We're just about 25 days away. What do you think should be on top of the mind as far as investors are concerned? Are you tracking any themes to be betting big on ahead of the budget too?
I think there's been some sectors which have taken a backseat in the last 6-8 months or one almost a year. Things like railways, infrastructure, road, water projects. So I think we've seen this stock correcting and not delivering because of some slowdown in the order flow, slowdown in payments. So one needs to see what kind of budget allocation come their way, because these are important sectors which will need good budget allocation and continuity of what has been earlier promised. So I think you can look at opportunities here and see if the budget is able to deliver on the expectations that are there for these sectors.
Fair point. Just a minute to go before the market shuts shop for the day. So let's quickly look at winding down, today's trading action. Look at the Nifty. It's at 26,175 right now. There's an almost 74 points of a dip that you see. So we've seen a lot of choppiness throughout the course of the day. You have actually seen the market slip to the low point as well. On the Nifty bank, when you see there's a 0.1% of an uptick remaining. So we pulled up from the day's low point for sure, but managed to just end with about 1/10% higher, 60,116 on the Nifty bank there. But it's the broader markets that still feel some pain. 2/10% of a loss for the mid-cap 100 index as well on your screens. So choppiness continues even though the broader markets. Look at even when we talk about the other sectors. Remember, we've been talking about how some of the sectors have been feeling the brunt today, especially when we talk about the IT space. That's been under the brunt, but metals have been rallying. You can see even the pharma space up and about, the real estate space that have been garnering some space. The IT space is in fact moved up about 0.3, 0.4% odd in the trading action today. Let's look at the top laggards as far as the sectors are also concerned, and let's see where the pain and the pressure point was felt in today's trading session when it comes to the sectors. It's a mixed trend that we've been looking at. Some of the sector losers are also coming up on your screens. You have Trent that has actually been the top laggard today, 8.5% of a loss for that one. Reliance Industries followed, ITC, HDFC Bank, Power Grid. These are all the names that dragged anywhere between 1 to about 2% in trade. Let's look at the winners on the other hand. As far as the Nifty gainers are concerned, Apollo Hospitals, 3.5% higher. Remember that pharma move has pulled up the hospital stocks higher. ICICI Bank, Tata Consumer Products, about 2.5 to 3% kind of a move on all of these top three winners as far as the Nifty is concerned today. Let's also look at some of the other big moves that we saw. Tata Consumer Products, HUL, and you also saw Sun Pharma pulling up in trade anywhere between 1 to 2.5% odd. So I think the FMCG space, the pharma space, that pulled up, IT space pulled up. Remember, it's a space when we are looking at a lot of geopolitical tensions and the investors are getting attracted to the defensive sectors, and all these three sectors, which are the defensives, have been garnering a lot of investor traction there. So that's the markets for you, 26,178. We have slipped by about 71.6 odd points on the Nifty today. Time to now take your queries now, viewers. Let's take the first question from all our viewers, list of questions that we received today for Neeraj. Neeraj, the first question is from Goa for you. This is Sam, who's asking you, can you please suggest some safe sectors to invest in a volatile market? Well, that's a good question. In fact, when we look at the new year, the starting of the new year is with the world again looking at geopolitics taking center stage, and of course the volatility that comes along with it. Which are the sectors that one should be really parking their money with?
It is one sector where the stocks are also not so expensive. We've seen some correction lately. All these FMCG names. So I think if someone needs to be really safe, I think come invest FMC and invest FMCG. That should be the sector to invest for you. And IT can be another sector, but then IT I think should be accumulated only in dips. So these are two sectors I would recommend for safe investors. And if someone is ready to go for the growth with some safety, then pharma is another sector where the CDMO, CMO space is one space which is doing well and which is really catching a lot of traction. So that space can also be looked at.
Okay. Next, we have a question from Aditi from Mumbai, who asks you, Neeraj, that gold and silver are rallying, including the ETFs. So when is the right time to invest in these commodities? Well, gold and silver have already performed quite a lot in 2025. They have, in fact, superseded everybody's imaginations with 180% surge on silver. We've also seen gold prices rallying by about 80%. Now come in another year when we are seeing geopolitics again pushing investors to look for safe haven appeal. What would you say?
Yeah, I would say gold and silver, the way they've run up, there will be volatility now after this run up. See, I'm still positive on that, but if you invest today and you see some correction after such a up move, you may get disappointed. You may invest and again see some correction happening. So right way to invest is through SIP. So if you invest in SIP, in gold, silver, or a multi-asset fund, that would be a better approach to invest as far as gold and silver is concerned.
Okay, we'll take the one last question from our viewers' choice of questions that are coming in. Krupa from Surat asks you, with so many IPOs now lined up for 2026, what are the key aspects investors should consider before investing in an IPO? Even though you did mention, Neeraj, that it's a time that you've been avoiding a lot of IPOs because of the valuation concerns and the steep valuations at which they have been launching at. But for an investor to really pick and choose which is the right IPO for them, what would you really advise there?
See, there are multiple factors. Of course, one, of course, is the valuation at what they're coming at. So what kind of P multiple, what kind of profitability, growth that is there, what kind of ROC the company has. But then, there's some companies which may not be profitable right now coming out with IPOs, but there you need to see the growth, the market share they've been able to capture, and the kind of, future prospect that is there. So it's not so simple for an investor to purely look at all the parameters and decide is where to go with a market expert and then look choose IPO you want to invest in. But then one has to be very, very picky now because last couple of quarters we've seen the IPOs which are coming up very expensive and you don't get that kind of return as far as IPOs are concerned. And most of the time, if it's a good IPO, the money just comes back. So you're not getting any return in the as far as your investment is concerned.
All right, Neeraj, thanks a lot for being with us on the program and helping all our viewers solve their queries as well. Good to have you with us on India Today. And with that, viewers, it's a wrap on the Business Today show. In case you too have any questions about your investments in mutual funds, SIPs, stocks or gold-related queries, then please do send them to us on the number that's flashing on your screens. And don't forget to tune in tomorrow morning at 9 a.m. for all the opening action of the markets with Abha Bakaya.